morning and welcome to the Options Trading for Income Weekly Update for June 22nd, 2015. Before we get going, we would like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that the risk in options can be substantial, and be aware of all your risks prior to placing any trades, and also that we are using hypothetical computer-simulated trades and results in the presentation that are believed to be as accurately represented as possible. However, live results may vary. Also, if you're listening to this, become part of our inner circle by joining our mailing list and getting your free report, The 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar. Also, come on over to our website, check out our programs. We have the super simple spread trades. We have the M3, the bearish butterfly, the Rock, the M21, and APM squared, which will be available very shortly. Also, stay tuned for our programs that are currently under development. We have APM squared, which will be coming out soon. We got the Trading Triangle book. We have the online Trading Triangle and directional spread trades. Also, stay tuned for the challenge of Lockup Hawaii 2016. We have lots of neat things going on there. Sherry, do you want to come on and just talk about that quickly?
Sure. If you can hop over to the website, I can show everybody where that information is. So John's going to put that up there, and if you see over to the right under his beautiful face there, there's challenges, and Lockup Hawaii is the page that we set up. So if you go into that page, if you would, and it gives some of the details. We're still getting the specific details figured out, but if he scrolls down a little bit, down closer to the bottom of the page, there is a link there, as he's highlighting it there. If you want to join our challenge, you can click there and you can send an email with your 8-month goal. And underneath that, the link there, if he clicks on it, it'll show you currently people who are participating and their goals. And so this will be updated, and I updated it actually this morning because we had a new participant. So this is what it looks like, and so I will be able to post the results of everybody's monthly target in the blocks as we go along. So the first posting will be coming up July 19th. So that's what that looks like. So it's pretty exciting. The percentages are awesome. I am participating as well, so I have to get going on that, but we will. My goal is 33% for the eight months with a 4.125%.
Right, and we'll get you in the market and get you rolling pretty quickly. But yeah, but you have to go anyway. But this is a great challenge for everybody. So it's all for fun, no obligation here. So come on and enjoy. Right. Super. Yeah. All right. So are you all set with that, hon?
Yep. Thanks. Have a good day, everybody.
All right. Thanks, everybody. Okay, so that's just an update on the Lockup Hawaii Challenge. We'll be updating that periodically from week to week. I have a question: is what is the minimum account size for the challenge? It doesn't matter. If you're trading my strategies, generally you need $5,000 to do that, but we're just going on a percentage of your account or planned capital that you're trading. So, so we can do that. All right, so that is that information. Let's take a look at the markets. Last week, I was thinking that because of the timing of the indices that the Russell was likely to break out higher, which it did do. Let me actually go to the Russell here. That I believe is the SPX. So here's the Russell right here. We were thinking when the SPX and the Dow bounced off of their support levels, that was going to push Russell to two new all-time highs and break higher, which it did. From here, from a technical standpoint, if I was looking at purely technicals, we would expect this to retest the area at 1280 and continue higher. If I look at the other indices, however, the SPX, for example, hasn't broken to new highs yet. The Dow has not broken to new highs yet, nor has the NDX. Therefore, my thought or my opinion on this is that we may come up and try and push these all-time highs in the well, this isn't an all-time high for the NASDAQ, but the post-crash highs in the NASDAQ and all-time highs for the SPX and for the Dow will maybe pushing those numbers or pushing the current resistance levels may push the Russell a little bit higher, but ultimately I believe that this is going to fail and drop back into range. So from a technical standpoint, I think the technicals tell us we're going higher. My personal opinion is that we're probably not going very much higher. So that's kind of where I stand for now. What would change my mind? And that would be a break to new post-crash highs in the NASDAQ. If we decisively break over this number, not intraday, but from a closing standpoint, then I may change my mind and have enough evidence to support the fact that we're likely to go significantly higher. But at this point, I just don't see that. So that's what I'm thinking on the markets at this point. As far as our trades go, let's take a look at option view here. We have, let's take a look at the June trades first. This is results week, so we get a chance to see how all the June trades panned out. So if we're taking a look at the V Condor in June, if you remember, this was the position we were in on Monday. There were no further changes in this, and therefore what happened is this trade just simply expired at this around 840 profit level here, which actually was into option view called it 971, which seems odd. Let me take a look here. It should have been 8. I'll have to fix that number on the charts. I actually wrote it down for 971 or 1.9% profit, but obviously that's not correct. That would have been valued out at 840 something. So I'll make the change there. But this was a very small win. Like I said, don't like it when we kind of sit in the middle position, which is pretty much what happened with this trade this month. As far as the June M3, that did have a couple of adjustments on during the week. So when we looked at this last week, this is the position we were sitting in. And it lost our calls on us here. Oh no, okay, let's see, what day did I make this adjustment here? So let me take a look at, this is not showing me my T-log, so let me just go back a half an hour, see if that pops up. If not, we'll close out of BackTrader and we'll open up again. And thank you for bearing with me on the option view stuff here. See if we can get this T-log to actually come up for us, because that would be helpful. Well, we have no T-log to show, but I can tell you or show you what happened here. So this is the position we were in prior to making our adjustments here on Monday. We started, what I wanted to do here, because the market continued, let's just go to Tuesday here. On Tuesday, the market shot up, and we had this Vega issue going on, which I can't show because for some reason it's making the trade early. It's not even allowing it to show me before the trade. Then what happened is I ended up closing out some of these upsides and selling the call and running into this position here, just essentially locking down the trade so that it was going to break even if the market continued up, or possibly make some money if the market came down. On Wednesday, when the market continued to go up, I just sold some more of these 1250, 1260s, and we ended up in this position here. I'm sorry, I didn't do the 1250, 1260s. I actually did the 1230, 1260s. Put ourselves into this position here and ultimately expired the trade for a profit number of about $524. So that was that position there. Right, and I'm just getting a comment that I have to log out of option view, which I believe is probably the case. So let me, thank you for reminding me of that while I'm online here. Let me just log out, and we'll come back in. And we will put ourselves back up here. We'll get into our Russell. Yeah, that's better. And I can show you the T-log for the June trade now. So essentially expired this out, and like I said, those are the vertical moves that we made, and that was that. So again, we generally an M3 trade likes a little bit more volatility or back and forth than this. We ended up getting kicked back a little bit, and then we had the up grind. So the fact that we broke even is pretty much standard for something like this on a month like this. So that was the M3 trade. If we take a look at the Rock trade made out very well. So I have a question. If I was doing a max run up count, what recent low would I start from? Oh, okay. So that's a charting question. So we can quickly look at that. Here on the Russell, if I was doing a max run calculation, it would be this low here still at this point, it would be this low here at 1210. That's what I'd be basing everything off of. So let's just quickly go back into option view here. Another T-log request for the M3, so let me just show the whole thing. This is where we started. We started actually up here at the 1240s. We ended up having to roll back and then roll back up again. So, and that's the rest of the T-log there. Okay, and we didn't make any changes. All right, let's take a look at the Rock trade. If you remember, the Rock trade was sitting in a position that looks like this. And we were up near our profit target numbers here on Monday, and essentially just looking for a clear signal that we're clearly over our profit numbers to get out of this thing. So no adjustments, simply, actually on Monday, I think we did make an adjustment Monday. Hold on a second. No adjustments on Monday. And then on Tuesday, ended up closing out of the trade by the end of the day. This was clearly up over its profit target for a good part of the day. So we just end up closing this trade out for a net profit here of, take a look at the reports. It's telling us $10,983, so a little bit over 20%. So really nice trade going on there in the Rock trade. So let's take a look at how we're actually doing for the year here. So on the bearish butterfly, we closed this June position very early at a reduced profit number because we were 21 days to expiration. So that took a 20.3% gain for the month. So very, very good gain. 64.4 for the year. So been essentially a decent year for the bearish butterfly this year. Actually a touch over what I would expect at this time of year. So a little bit higher than expected. We have the M3 trade, which has been doing fine all year. This month it took essentially a break even. However, most of the year it's been doing fairly reasonable numbers. Expected out of this for the year would be in the 60% range, giving us, since we're halfway through the year, 34% halfway through the year. That's about right on track where it should be. Then we have our Rock trade, which we're expecting a 120 for the year. After the June close, this is up 85% for the year, so very, very, very good there. We're actually a little bit ahead of schedule. And then, of course, we have the V Condor, which is pulling about 39%, which is above average for this trade for the year. So that's how we're making out so far. And if we get the second half of the year like the first half of the year, it's going to be certainly a fantastic year. So very good there. All right, let's take a look at what we have for July trades coming up here. So for our July trades, we have a July M3. We will take a look at this on Thursday prior to adjustment. So no moves on the July M3 trade until Thursday. We were looking like this. We had our butterflies back at 1220. We had 5 1220, 1230 verticals in here. We have our long call at 1100. We are positive Vega. We're more than 10 points over the long strike. Generally, by guidelines, we're going to roll this up, so that's what we did. We took our 1220s, rolled them to 1240, and added some verticals in there to flatten it out. So if you take a look at half an hour ahead, we're now at the 1240s. We have 5 1240, 1250 verticals. We have 5 1240, 1260 verticals. We're sitting at minus 44 delta, approximately break even. Theta is 106, Vega is minus 242. So nice, healthy looking position here. and this is what the position looks like. So nice, nice looking M3 trade. If we run over to the following trade and hit the July bearish butterfly, then that also got an adjustment on Thursday, I believe. Yep. So let me go back a half an hour. We will switch over to the July bearish butterfly. This is the way we sat on last Monday. We have an add point, our last add point at 1280. We're clearly over 1280. We do not, or we did not have a delta theta issue prior to 1280. We have one now, possibly, but we're past, well, actually we don't even have one now, but we're past 1280. So all we did is we added the last third in here at 1280, and the position looks like this here. So now we're all fully scaled in. We have a roll point here at a hard roll point if we close over 1290, which could possibly happen today. The position currently looks like this, so we are fully scaled in. If we get the back down that I'm expecting, this will actually end up being should end up being a very good trade this month. We'll see if that comes to pass or not. But if it continues up, good chance we'll still make out okay also, unless it comes up fast. If we have a hard, fast move from here up to 1300, say, we have a risk of max lossing out. But anything else, generally this should be okay. So this is what we have on the July bearish butterfly front. We also have, let's see, a July V condor. And let's take a look at that. And then we'll answer the questions afterwards because I have a couple of questions. So our July V condor, again, had to be adjusted on Thursday. So if we take a look at what's going on here, we ended up getting kicked over our maximum delta limit by the end of the day. By the end of the day, we kicked over our maximum delta, so I ended up buying back 2 of these 1330 calls and put ourselves into this position here. And that's what we look like thus far. So if this market continues to grind up slowly, then this will be a very, very good trade for the month. If not, then we'll see. We could run into some challenges. But as of right now, this is looking quite well. Actually, you know what? We actually have a delta problem here on this trade. So technically, this needs to be rolled back. I'll have to do that today if the market doesn't back off. So if the market doesn't back off, then, well, this is kind of a borderline thing. If we go by the rules here, this is kind of a borderline. I could actually leave this. If the market's up today, chances are I'm going to hit a trigger. So let me rephrase that. Let me say that I'm going to leave this because this is so borderline at this point. Technically, I could go either way here. So I'm just going to leave it. And if the market's up today and we have a delta theta issue here, then we'll roll the whole position. As of right now, this is actually okay. So anyway, that's what the June V condor looks like. I'll show you the T-log to this. I got a request for the T-log on the July bearish butterfly, so let's do that. This trade here started at 1220. We had a delta theta roll to 1240. Then we added the 1260s, and now we added the 1280s. So pretty straightforward position there. And let's see here. I am going to go to a July V condor. I already did that. July V condor is done. We had a July rock trade entry on Wednesday. I actually entered this as an M3. We did the entry test, and it told us to enter as an M3, which is a little bit of a surprise with the grind we're having. A lot of times it'll push you into a rock trade on entry, but it was fairly close. But it was actually an M3 entry. We were under 100 minus 180 delta. There was no way I could get 5 upper butterflies in had I entered the lower butterflies. So we went in for the M3 entry. We did an M3 entry at 1240 with 6 1240, 1250 verticals, and 4 1240, 1260 verticals, and a call here at 1150 with a T-log that looks like this. And I also have a request for a rock T-log on June. So since I'm in the T-logs, this is what our rock T-log looks like in June. We entered as a standard rock trade, and then we just had to do some scaling in. So this was a pretty straight up rock trade. The fantastic thing about a rock trade is if you're in a condor environment in rock position, I mean, you just kick it. It's a huge return on the trades at that point. So and that's kind of what we're in. We're in a basic condor environment right now. Probably not for long, but that's kind of what we're in right now. So that is that. Let's take a look at the last thing I entered here, which is an August V Condor, and we will get to some questions. So here is what we have for August. I came in Friday after the expiration of June, sold our 1180s, sold the 1370s, did 30-point wings, and added a straddle here at 1270 to give us a position that looks like this. And that's what we have. So we're off to the races with this particular trade. And if we want to look at the T-log, here's what we pulled in for a T-log. So let's go over and see what we have for questions, and we'll go from there. I'm going to try and hit the first one. Hopefully I don't miss any. All right. So regarding a maximum run standpoint, wasn't there a 30-point pullback? Yeah. So let me look at this. If we had a 1210, we went to 1260, that's 50 points, and we dropped back about 20, 25. Yeah, so you could call that a retracement. We also probably had a 30% length in retracement. So yeah, so technically if I'm doing a maximum run, you're right. If I want to do a maximum run calculations for an M21, I was thinking when I was asked the question, I was thinking if I'm using the 80-point from the bottom criteria for the super simple spread trades. If I'm using the 80-point from the bottom for super simple spread trades, then we've almost hit that at 1294 or about 1290, right? From an M21 perspective, calculating maximum run, then yes, then this would be considered a pullback deep enough to consider that we're likely to run another. It's possible we'll run another 160 points from here, which puts us at 1390, which actually I don't think is going to happen. But yeah, so technically you're right, Alex. That would be correct. For real trades, do I recommend a typical trader who has the capital to trade all strategies such as the M3, the bearish butterfly, rock, and V, or stick with only one? I generally recommend you stick with only one. And that one trade I would recommend until you get very good at it would be an M3, and then I would throw in a small bearish butterfly. And then once you get used to that, I would run a bearish butterfly with a little bit of market timing. In other words, just run it with a little bit of common sense market timing. And then from there, I would push into starting to work on the rock trade and then push into the M21, assuming you wanted to go that far. A lot of people trade the M3, and they're good with that. But that's generally the progression of things if you'd like to really get into trading and really start pulling some returns in. Would it make sense not to use the straddle in the V Condor if rut volatility is below, example, 20%? They generally no. Like if you look at 2013 when the volatility was very low, condors were getting hammered to the upside, and it was below 20%. The V trade did fairly well in that environment, and it's because of the straddle that it did well. The Achilles heel to the V trade, I mean, it has a couple of times when you're going to be challenged, right? One of the times, and this isn't a terrible challenge because essentially you didn't lose money, you just didn't make anything. Like a month like last month where the market went down far enough to kick you out of some of the puts, and it didn't make the explosive up moves that it usually makes when that happens. In other words, it kind of kicked you out to the puts to the downside, and it kind of bounced a little bit, and it died for a very long period of time, which is a little bit unusual. Under those conditions, you're not going to lose money, but you're essentially taking a break even on the trade, where a regular condor, it's hard to say what would have happened. You could have got kicked out to the downside in a regular condor. You could have had problems to the upside, especially in July in a regular condor. If you're in a regular condor in July, you may or may not. I have to go back and back trade it. I mean, in general, market conditions like they are right now are very good for condors because it's kind of slow moving, volatility is dropping. They generally do fairly well. But if you get like a 2013 environment where you start getting some real up moves, even with the low volatility, you're going to get whacked out of a real regular condor fairly regularly, where this usually does pretty well. So, it's all your type of trading. I have traders who trade the V condor without the V, and then if they run into a delta problem, they add it, and certainly they probably would have done better last month, and using that technique. But the trade itself being designed for quote unquote the trade that handles a trade that's supposed to be able to be traded in all market conditions with one set of rules and nothing variable in it, then the V condor with the V actually works better in general over long term than a regular condor. So that's why that's that way. So you could certainly have that. So in the M3, I had difficulty filling a condor roll this all week, as the roll was very small debt or very small credit. The market wasn't interested in it. Could I suggest a way to make these rolls as individual spread trades? I never did get filled. Yeah, so look at your options. You have this specific. One of the things that was hard to move all week is the 1240 put. If you're looking at the 1240 put, I mean, I don't know what month we're talking about here, but particularly in July, the 1240 put has been hard to move all week. There's really no trading volume right now, so it's hard to move certain stuff. It's getting a little bit more challenging to move stuff. So I would suggest doing it small. I mean, I know you trade a decent size, Curtis, so I would just suggest doing it a vertical by vertical. So if you have 20 condors to move, then you do 4 verticals when the market's pushing down a little bit, bullish verticals when the market's pushing down a little bit, do 4 when it's bearish verticals when the market's pushing up a little bit, and just kind of walk your way higher, because it hasn't been moving that much, except for with the exception of one day this week, which was last week, which was Thursday. Of course, Friday it moves a little bit too. But I'm sorry, Wednesday. What do we have? The move Wednesday and Friday or whatever. Those 2 moves were fairly good. But Thursday was a decent day to adjust when the market was down a little bit. So anyway, that's just my comments on that. Just time the markets running verticals, and you can do done. If somebody is not participating yet, is it a suitable idea to join now with fully scaled in bearish butterfly? You can do that. To me, you don't have much upside room from there, so it gets a little bit risky if you're running a July trade to go fully scaled in. What I might do is run into maybe a 2/3 scaled in bearish butterfly, making sure your delta theta ratio is okay, and then if it continues up, go into the last third. In other words, go into maybe some 12. Well, today you might be able to do some 1290, 1270s. Run into that trade. If the market shoots up to like 1310, you can scale into the 1310s. But yeah, you can do that. If the market does what I think it's going to do, you'll be perfectly fine. If the market gets a little crazy and really takes off, then that may be a challenge for you. But I think you'll probably be fine. Delta theta on a V condor, if I get a 1-to-1 delta theta ratio with an up move, I am going to roll it. I already showed the T-log for the rock trade. I showed that T-log. How far do I think the Russell goes up from here? I pretty much think it's done. I think it will go as high as, in other words, the SPX, well, let's look at the NDX. I think the NDX is going to fish for this number up here. And I think once it does, the SPX will the Dow is probably going to be up at 18.2, and the SPX is probably going to be somewhere in the 2130 area, at which point the Russell's, I think everything's going to turn around. So where does that put the Russell? It probably puts the Russell maybe as high as 1300, but I probably wouldn't expect it from that. If I'm doing price pattern analysis on the very latest price pattern, right, this is not the big price pattern, but if I'm doing price pattern analysis on the latest price pattern, it puts us at a top of about 1295, right, between 1293 and that 1295, which would be a completely expected move. And I think if that number, the 1293, 1295 area, which we're not far from there now, lines up with where everything else tops out, then that's a good likelihood that we're going to back down off of that number. Certainly we have the power here, if we're looking at the larger price patterns, we have the power here to pull to about 1350, which I do think the Russell is going at 1350, and I think it's going there this year. I just don't think it's going there this month. I think it's usually we have a nice run up in October, and that's probably going to, if seasonal patterns hold, that's probably going to bring us to 1350 area. Again, that's a fairly large area because we're looking at price patterns all the way back to 2008. But that's going to put us at an area where we have a high likelihood of a very, very bad, nasty down move. So that's what I'm thinking. But for right now, I just don't think we're going to 1350 yet. Is there a pattern that I identified which help you determine the target for the possible run-up? Oh yeah, okay, so we just kind of talked about that. Yeah, assuming the top of the price channel is ignored, and then yeah, I have a cut pattern here. I have another cut pattern here, which I don't even know where that comes out to. But realistically, you would want to look at the width of this pattern right in here, and project higher if you're going to do that, which again puts us up at the 1350 level, which is a number that comes up a lot in technical analysis if you're doing M21. Okay, I believe that is all the questions. So thanks everybody for joining me, and happy trading. We will talk to you next week.